Could we talk a little bit about the paradigm shift from batch-based processing to message-based processing?
Certainly. Traditionally, back office is comprising of a number of business unit streams. Each of those streams are supporting themselves with their own solutions, and that operates on a batch basis. So correspondent banks will provide statements of their trading and payment activity overnight, and generally you're basically processing yesterday's activity. So you're always dealing retrospectively for the position in the bank. Basel III, Dodd-Frank, EMIR, new regulations are saying, well, that's not really good enough. You need to know where you are today, by the minute. And so in order to facilitate that capability, you have to move from a batch base to a message-by-message processing. So you're talking about real-time message processing. And that's a real challenge because traditionally, one institution is providing overnight statements. Today they have to look at using new messages across the whole spectrum of instruments and processing steps in the life cycle of a trade. And that's a real challenge. Some of the challenges that they have in that message space are, for example, messages aren't time-stamped. Typically the 900, 910 statement of accounts doesn't have a timestamp. So you have to establish new rules on how you process those messages within those processing systems.
Do you have a sense for how many firms are making that switch?
Everybody. Everybody in the banking financial institution space is affected in one way or another by Basel III, Dodd-Frank or EMIR. Okay? So everybody is trying to tackle this question, and it can't be done by an individual organisation or even an individual group of organisations. It has to be addressed by the community at large. It has to be addressed by the infrastructure organisations and the messaging and the feeds. Everyone has a responsibility to participate.
Could we also talk about the push for a single platform approach to these issues?
Well, it really comes down to understanding that in any one institution today, across the back office, middle office, there are potentially thousands of individual systems, each purchased over a period of time, and as time has progressed, so technology has progressed. So you are left with a landscape of a large number of different technologies. The challenge, of course, is these solutions don't talk to each other. Sometimes they cannot talk to each other without a great deal of ETL work or message transformation. And so it's very difficult to understand how you bring all that information together. Now, in order to support different technology systems, you have to have expertise in that technology. And so there's a huge investment in any one organisation into IT support. Well, in order to reduce and substantially reduce costs today, you have to look at providing a smoother technology stack. And of course, that's where the platform comes in. If you're providing an operating and processing set of solutions on a single platform, you substantially reduce your operating costs and your support costs.
In the past, we've talked a little bit about the squeeze on the funding for operations. What is driving this funding squeeze on operational costs?
Really, it's you got on one side you've got regulations being imposed upon the banking community, and that means that they have to make investment. So they have to provide additional funds to put those regulations in place. At the same time, the banks are saying, well, we can no longer operate with 11,000 people in the back office doing the processing. They're looking for substantial cuts. We're not talking about the regular business model of we'll take 5% this year and we'll look to reduce that. They're looking at 40, 50, 60% cuts in operational costs, which is a huge figure to be looking at. And the only way to get over that is to look at a new operating paradigm. You can't just cut a few heads here and there. You've got to look at a new way of operating, which is where utility models come into play specifically. And as I said at the very beginning, traditional model is that every line of business in the bank will be supporting their own operations. For example, in reconciliations, in which SmartStream is a leader, you may well have Nostro reconciliations, securities reconciliations, treasury confirmation reconciliations, each being supported by their own teams in that line of business. So one way of reducing substantially the cost of operation is to provide an internal utility, where you have a team which is expert in reconciliations, and then using the business expertise to resolve exceptions, and that helps in the cost model. And then the bank is able to provide those services internally and potentially to external parties, growing the business. And that all comes down to having a single platform, rationalising the solutions that you have in play, and reducing your operating costs. But today, banks are not just looking at the internal utility, they're looking at externalising that support. Down to new terms are coming in, out-tasking, out-servicing, utility models, which are heavy lifting the back office process to a third party.